Good afternoon, everyone. Am I audible?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
We were doing sums on cash budget. We'll continue with that. Last class, I had done 5 sums. Today, we have to start with the 6th sum. So, let's start with the 6th problem. From the following particulars, prepare a monthly cash budget for the quarter ended 31st March 2020 and all the amounts are given in lakhs. So for the first quarter ending 31st March 2020 means the quarter began in January. So January, February, March, for 3 months we have to make a cash budget. That is for the first quarter we have to make a cash budget. So let's draw a cash budget for January, February and March. So what all information is given, we will see one by one and we will record it. 10% of sales and purchases are on cash. So we have to note down 10% of sales as cash sales under receipts, because as soon as we sell, we receive money. So cash sales into bracket 10% of sales. So we have to take 10% of 5. We have to take only of Jan, Feb and March. So for Jan, the sales is 4 lakhs. So 10% of 4 lakhs will be 0.4. So cash sales for Jan. We are preparing only for Jan, Feb and March. Then for Feb you have 5 rupees, 10% or 5 lakh 10% would be 0.5, that is nothing but 50,000. And for March, the sales is 6 rupees, so it will be 0.6. That is 60,000. If you want, you can take whole numbers also, because here the numbers are 5, 6 and even in decimal. So again finding decimal of that will become little difficult. So you want me to take the full numbers like 5 lakh, 6 lakh, 4 lakh, or you want me to take 5, 6, 4, 5 only? You want me to take whole numbers in lakhs, adding all the zeros, or let us take a single digit only?
This is fine, ma'am.
Single is fine, okay.
Ma'am, single digit.
Okay. They said cash sales is 10% of sales, and there is also cash purchases they have mentioned about. So cash purchases, when we purchase on cash, we make payment. So under cash purchases, 10% is cash. 10% of purchases. So we have to see the purchases for Jan, Feb and March. See the statement. 10% of sales and purchases are on cash. So sales we took, now we'll take purchases. For Jan it is 3 lakhs. So 3 lakhs 10% will be 30,000, which is nothing but 0.3. For Feb it is 2 lakh. 10% of 2 lakh will be 0.2. And for March it is 1 lakh, 10% of 1 lakh will be 0.1. That is nothing but 10,000. So we have finished the first adjustment. The second, credit to debtors 1 month on an average. 50% of debtors will make payment on due date, while the rest will make payment thereafter. Will make payment 1 month thereafter. Okay, so what is this? We will understand first, and then accordingly we will have to prepare a working note for it. Now, out of the total sales, 10% are cash. That means the remaining 90% are credit sales. That means the remaining 90% should be paid later. So when, later, and how it should be paid, that is what we have to do. So we will prepare a working note for collection from debtors first here below. And in working note, we'll take all the months. So it is from November to March. So November, December, Jan, Feb, and March. Okay, so first we will have to write the credit sales value because cash sales we have already received. So the remaining 90% which is credit sales, we'll have to receive it still. So 90% of sales is the credit sales. So for November, the sales was 5 lakhs. So 5 lakhs, 90%, 0.9 is 4.5. That is nothing but 4,50,000. December it was 6. 90% of 6 is 5.4. January it was 4. 90% of 4 is 3.6. February it was 5. 90% of 5 is 4.5. In March sales was 6. 90% of 6 is 5.4. So these are the credit sales which we have to receive. So these are the amount that we have to collect. So we'll write next collection from debtors, or you can also write it as accounts receivable. So how are we going to collect? We will see. So here we do not have anything. Below that we'll write the collections. So they have said credit to debtors 1 month on an average. So we are giving 1 month time to pay the money to the debtors. But see further what they're saying, 50% of debtors will make payment on due date. What is the due date? Due date is 1 month after they have purchased, or 1 month after we have sold. So if I have sold in January, they should pay me in February. So that is the due date. But only 50% of the customers are paying on the due date. That means only 50% of customers will pay me within 1 month time which I have given. What will the rest do? The rest will make payment 1 month thereafter. That means the remaining will take 1 more month. So what this statement means is 50% of the customers will pay you 1 month after sales, and the remaining 50% will pay you 2 months after sales because they are asking for 1 month extra. Did you understand the logic? Any doubts? Is the logic clear?
Ma'am, unmute your mic.
Ma'am, you are not audible.
Sorry for the disturbance. So 50% of credit sales in 1 month and 50% of credit sales in 2 months, because 50% of the customers will pay on the due date which is given, that is 1 month, and the rest 50% will pay after 1 month. Another 1 month they will take. Okay, just a minute. So let's solve now. 50%, whatever November sales we are making, 50% of that will be paid after 1 month. So now, after 1 month means it is in the month of December. So November sales, half will be paid in December, 2.25, and the remaining half will be paid in January, which is 2.25. I hope the logic is clear. This November sales of 4.5, half is paid in November and half is paid in December. So it's going like this, because 50% of it in 1 month, that is in the next month, and the remaining 50% of it after 2 months. So I have to leave November, December, and after 2 months, that is in January. Is the logic clear?
Yes, ma'am.
Okay. So let's do it for December now. 5.4, 50% of that is 2.7. So December sales will be received, half will be received in Jan, 2.7 lakhs, that is nothing but 2,70,000, and remaining half will be received in Feb. Similarly, we'll do it for Jan. 3.6 lakhs is the sales, that is nothing but 3,60,000. 50% of that is 1.8 lakhs, that is 1,80,000. So 1.8 in Feb and 1.8 in March. And then we'll see for Feb sales. Feb 4.5 lakhs, 50% of that is 2.25. So 2.25 in March and 2.25 in April. So for April we are not doing, that's why we will not be preparing that thing. Now we have, if you see here, observe here, for Jan, Feb and March we have the values, and that is what we are preparing the cash budget for. So we will total here. So total collection from debtors. We'll add this. We will get the collection amount. And this amount we will take it under cash receipt as collection from debtors. So these are the values. For Jan, we are collecting 4.95, 4.5 and 4.05 accordingly. So this is what is the collection from debtors. And you can write working note number 1 in the bracket, so that in the exam, the evaluator can check the working note as to how you have calculated. So we finished the second point also, how we are going to collect money from debtors. So let's go to the third point now. Credit from creditors, 2 months. Who are creditors? Creditors are the ones from whom we have purchased goods. So we need to pay them money. So cash purchases was 10%. So we write here credit purchases. It will be how much? 90%, right? 90% of purchases. Now for this also we will do it as a working note, because for each month we need to find what is the 90% and then we need to take it 2 months ahead. So similar kind of working note we'll have to make. Working note on debtors, credit purchases, 90% of purchases, and we'll take all the months. November, December, Jan, Feb and March. Something. Okay, so let's find now what are the purchases that we have made. November it was 1, so 90% of 1 is 0.9. December it was 2, 90% of 2 would be 1.8. Then January it is 3, 90% of 3 is 2.7. Feb it is 2, 90% of 2, 1.8. March it is 1, 90% of 1 is 0.9. So these are the credit purchases, and they have said it will take 2 months for payment. So payment into bracket 2 months. So whatever we have purchased in November, we will leave November, December, and we will pay it in January. So January 0.9 we are paying, which is November month payment. Then December 1.8 we will pay it in February. I am keeping a gap of 2 months. So November whatever I have purchased, I'll leave November, December, and I'll pay it in Jan. December whatever I have purchased, I'll leave December, January, and pay it in Feb. And Jan whatever I have purchased, I will pay it in March. So this is how the payment will actually work. So this is the payment 0.9, 1.8 and 2.7, which we have to record it in the cash budget. So 0.9, 1.8 and 2.7. This was about the purchases. So we finished this adjustment as well. Then wages to be paid twice in a month, on the 1st and the 16th respectively. Such kind of sums we have done earlier also. So we have to pay wages half in the current month and half of the previous month, right? We take it as previous month, correct? First we'll write here wages. We write twice a month. So from 1st to 15th, whatever we work, we will get on 16th, and from 16th to 31st, whatever we work, we'll get it on the next month first. So half of current month and half of previous month. Okay, so let's record it like that now. So current month, that is January month, what are the wages? Wages for January are 2.2, half of that, so that is 1.1. So we will pay 1.1 in the current month, and half of the previous month. So January's previous month was December. December wages was 2, half of 2 is 1. So we will pay half 1 here. This should be 1.1. Okay, now January is 1.1. We'll go to February as previous month, and whatever we have in February, that is again 2.2. So that will be here 1.1. February is 1.1. We'll go to even March because that is previous month for March. And March, whatever we have, 2.4. That is, it will be 1.2. Will be the current month. Remaining 1.2 will go to April, but we're not preparing for April. So this is it for wages. Let's see what is the next adjustment. Expenses are generally paid within the month. Within the month means there is no time lag. So if it is January month expense, it will be paid in January only. That is what it means. So within the month means in the same month. If they would have said within 1 month or after a month, then we would have paid 1 month later. So this month we spend and next month we pay. But here they are telling expenses are generally paid within the month. That means January expenses will be paid in January only. It is not going to February. So whatever are the expenses values for Jan, Feb and March, we'll take it as it is. So if you see here for all the 3 months, it is 0.5, 0.5 and 0.5. So we will take it like that. So you write here expenses. So this was about expenses. Let's see what next is given. Plant costing rupees 1 lakh will be installed in February on payment of 25% of the cost in addition to the installation cost of rupees 5,000. Balance to be paid in 3 equal installments from the following month. So let's first see what it basically means. So the plant is costing 1 lakh. Of this 1 lakh will be paid, 25% of this will be paid on installation. So I'll write here 25% on installation. 25% of 1 lakh is 25,000. When we are installing it in February. So February we will pay 25,000. Okay, then what they have told next, let's see. 25% of the cost in addition to the installation cost of 5,000. So in February we are installing, so another 5,000 we will pay in February for installation cost. And I will write it here. And the total, I'll write it here, 25 plus 5, that means in February we are going to pay 30,000. Then, what next they have told, let's see. Balance to be paid in 3 equal installments from the following month. So what is the balance remaining? The balance remaining is 75,000 out of 1 lakh. 25,000 we are paid on installation. Remaining is 75,000. This 75,000 should be paid in 3 equal installments. So 75,000 divided by 3 if I do, I'll get 25,000 each. So that means I'll be paying 25,000 in March. And then 25 in April and 25 in May. But we are not bothered about April and May because we are preparing cash budget only for January, February and March. So how much we are paying? We are paying 25,000 in March. So if you see here, 30,000 in Feb and 25,000 in March. These are the two values which we should take as plant purchase. Okay, because it is we are paying it on plant purchase. Any doubts with this calculation? Is it clear?
Oh, ma'am. No doubt. Yes, ma'am.
So now I cannot take 30,000, 25,000 because we have taken everything in decimals. So I have to remove the zeros. So 30,000 will be 0.3 and 25,000 will be 0.25. Okay. So here I will write payment for plant purchase. Remember, plant purchase was 1 lakh. So if I would have taken 1 here, instead of all the zeros, if I would have taken 1 here, this would have been 0.25, this would have been 0.05. So that means this is 0.3.
Ma'am. And why 30,000
Why?
on February?
Because they have said 25% of 1 lakh, that is 25,000 plus 5,000 installation cost. See here in the question, 25% of the cost, in addition the installation cost of 5,000. So in February we have to pay 25% of 1 lakh and 5,000. So totally 30.
Okay, ma'am.
Okay. So
Okay.
in Jan nothing, in February it will be 0.3 and in March it will be 0.25. Because we are taking it in decimals, I mean we have not taken the 5 zeros for lakhs anywhere, so it will be 0.3 and 0.25. Next we'll see the next point. Opening balance of cash is 2 lakhs. So here if I remove the zeros, it is basically 2. Okay, so that's the opening balance that we'll take at the end after finding the total of A and total of B. That is collection and that is receipt and payment. The total of A Excel has a problem of rounding off. So 5.35 is the total. I'm adding the receipts. So this is the total receipts, 5.35 lakhs, 5 lakh and 4.65 lakh. Now let's find the total of B. Which is nothing but the payments. So it will be adding all the payments. Okay, so now we'll find the surplus or deficit. To find the surplus or deficit, we do A minus B, that is nothing but receipt minus payment. So if you observe, for January we have a surplus of 1.55 lakhs, which is 1,55,000. For February we don't have a surplus or deficit. Your receipts and payments are same, 5 lakh minus 5 lakh, which is 0. And for March we have a deficit because we have collected only 4.65 lakh and we have to pay 5.85 lakh. So we have a deficit of 1,20,000, that is 1.20 lakhs. Now we'll add the opening balance. So opening balance for January was given as 2 lakh. We are not taking the 0, so we take it as 2. Once you add the opening balance, you get the closing balance. So 1.55 plus 2 is 3.55. 3.55 will become the opening balance for Feb. 0 plus 3.55 will remain 3.55 as closing balance. 3.55 of Feb closing will become opening balance for March. And there is a deficit. So from this 3.55, we'll have to, it will get minus, so it will be 2.35. So these are the closing balance: 3,55,000, 3,55,000 and 2,35,000. Anybody having any doubts in this sum? Okay, the major things that you have to remember is how to do the working notes properly so that you don't fail in that and you get a wrong number, wrong figure. So you need to be very cautious while doing the working notes. And we had 2 working notes here. So these are the 2. Fine, I'll copy this in the Word document and I'll share it with you. Let's do the next sum. Any doubts in this sum, anybody? Any doubts?
No, ma'am.
Okay.
No, ma'am.
No, ma'am.
Okay, let's go to the next sum, the 7th problem. Okay. The following information for ITC is given below. So they've given all the details. Let's see how many months they have asked us to prepare the cash budget for. Construct a cash budget and determine surplus or deficit for the period January to June. So we need to prepare it for 6 months. That is from Jan to June. So Jan, Feb, March, April, May and June. For all these months, we will prepare the cash budget. So we'll see one by one what is given in the question. If you have observed, I am always starting with the bullet points, not with the table. So whatever is given in the bullet points is related to this tabular data, which we will accordingly use. Okay. So 20% of sales are on cash and balance on credit. So first we need to take cash sales under cash receipt. So cash sales, 20% of the total sales are cash sales. So 20% of sales we have to find. The sales value is given here. For all the months, we want from Jan to June only. So January sales is 1,20,000. So we have to find 20% of 1,20,000. You get 24,000. Same way I've calculated for all other months, so I'll just record it. Then 20% of Feb sales will be 20,000. 20% of March sales will be 30,000. 20% of April sales is 48,000. 20% of May sales is 40,000. And 20% of June sales is 40,000. Okay, so these are the value of cash sales. See here, this is sales value. So I've calculated 20% of everything. Next, the firm has a gross margin of 25% on sales. So at this point, we will do it at a later stage to find the value of purchases. So how do we find it? What do we do? There's a big working note for it, which we will do little later. So this adjustment is done. I'm marking it red. The second one we're going to do later. Let's see what is the next given. 50% of the credit sales are collected in the following month after the sales, 30% in the second month and 20% in the third month. So whatever credit sales are remaining, 50% of that in the next month we will receive, then 30% in the second month and 20% in the third month. So in 3 installments you're going to receive your money. We need to do a working note for it and find out what are the total receipts for each month that we have. So we'll prepare a working note on collection from debtors. For working note, I have told you we will take all the months, not only the months for which the cash budget is asked, but the details which are given from November. So we will take all the months from November, December. So from November to June, I have taken all the months. So first we'll write the credit sales. We saw above that 20% of the sales were cash. That means the remaining 80% of the sales are credit sales. So 80% of sales. So we'll find 80% of each month's sales. So November sales was 2 lakh. 80% of 2 lakh is 1,80,000. Similarly, for each month I have calculated. For December it is 1,76,000. For January it is 96,000. February it is 80,000. March 1,20,000. April 1,92,000. May 1,60,000. And June 1,60,000. All this is nothing but 80% of the sales value which is given in the question. So sales value here 2 lakhs 80%, you saw 1,80,000. 2,22,000 80% will be 1,76,000. 1,20,000 80% is 96,000. 1,80% is 80,000, and so on. I've calculated 80% of the values. Now we are interested in how are we going to collect this money. So here is what is the working note that we are focusing on. They have said 50% of the credit sales will be collected in the following month. That is first month after sales. So I'll write here collection. %50 of credit sales in first month. I'm writing it as first month because after sales, the very next month is the first month. They have told in the question in the following month. That means in the next month. We can also write following month. Then 30% in the second month and 20% in the third month. So here I'll write 30% of credit sales in second month and 20% of credit sales in third month. This is how we are going to collect. Any doubts in this? 50% in following month, 30% in second month, and 10% in the third month. 20% in the third month. Anybody having any doubts in this?
No, ma'am.
Okay, so let's do it from November onwards. November 1,80,000 is credit sales. 50% of it I will receive in December. That is the first month. After November, the very first month is December. So 50% of 1,80,000, sorry, it is 1,60,000, I'm sorry. So 50% of 1,60,000, just see here, the sales of November was 2 lakh and 80% of 2 lakh is 1,60,000. So that is 1,60,000. So of 1,60,000, half, that is 50% in the first month. So half is 80,000. Then of that 1,60,000, 30% in second month. So if I leave November, December, 2 months after that, I will be getting next 30%. So 30% of 1,60,000 is 48,000. And remaining 20% in the third month. Third month is February. So 20% of 1,60,000 is 32,000. If you add all these three, 80 plus 48 plus 32, you will get 1,60,000. So how we are going to receive 1,60,000? Half in December, 30% in January, and 20% in February. So first month, second month, third month. Any doubts with this?
No, ma'am.
It's very, very important to understand what we are doing. And remember, always I'm repeating it. I'm taking 50% of 1,60,000 full. Then 30% of 1,60,000 and 20% of 1,60,000. So when I add all these three, it should be equal to 1,60,000. And this is how we are going to receive. Now let's start for December. 1,76,000 in December. Half, that is 50% in first month. So first month of December is Jan. Exactly after December comes Jan. So 50% of 1,76,000 is 88,000. Then remaining 30% in the second month. So that is in February. So 30% of 1,76,000 is 52,800. And 20% of 1,76,000 is 35,200. So when I add all these three, 88 plus 52,800 plus 35,200, it becomes 1,76,000. So this is how we have collected for December. Then next is January. Half of January is 96,000, which is equal to 48,000, which I'll receive in February. 30% of 96,000 I will receive in March, which is 28,800, and 20% I will receive it in April, which is 19,200. So if you add this 48 plus 28,800 plus 19,200, it will come to 96,000, which is January month credit sales, which is received in Feb, March, and April. Any doubts, please ask. February is 50% I received in March, 30% I will receive in April. So 30% of 80,000 is 24,000. And the remaining 20% I will receive in May, which is 16,000. So we have finished February. Now we'll go to March. 1,20,000, half of that is 60,000, which I will receive in April. Then 30% of that is 36,000, which I will receive in May. And 20% of that is 24,000, which I will receive in June. So we finished March. Now we'll go to April. Half of 1,92,000 I will receive in May, which comes to 96,000. 30% of 1,92,000 is 57,600, which I'll receive in June. And remaining I'll receive in July. But I'm not preparing it for July, so I will leave it here. I will not calculate 20% and write, because July I'm not doing. So I finished till April. Now let's go to May. 1,60,000 half I will receive in June, which is equal to 80,000. And the remaining amount I will receive in July and August. So I'm not preparing July, August, so I'm not recording. So these are the total collections. And now we need collections from Jan to June only, because our cash budget is from Jan to June. So we are just going to total from Jan to June and take this total there. So here I will write total collections. Can anybody tell me why for Jan we don't have anything here in the third month? or in the 20% of credit sales?
Ma'am, they have asked for second month and third month, right? So,
So if October was given, then I would have had something here also, because for October, first month is November, second month is December, third month is Jan. Because October is not there, we don't know the third month value here. So we are only going to take whatever we have. So we'll just total it. So these are the values of collection from debtors. Okay, we have added all and we've got it. So we will paste it above. So right here, collection from debtors, and into bracket working note 1. Okay, so we've got the values. Now let's see what is the next point. So we've finished the collection part of it. Then material for sales of each month is purchased 1 month in advance on a credit for 2 months. So now we'll talk about the purchases. Now if you just look at the table, have they given purchases anywhere? No, they've not given it anywhere because the value is not there in the question. They've just given sales, wages, and miscellaneous expenses. But they're talking about purchases. That means we need to find the value of purchases. Just see here, material for the sales of each month is purchased 1 month in advance on a credit for 2 months. That means we have purchases. We're going to purchase it in advance and we're going to pay it after 2 months. So we need to find the value of purchases. Now, whatever we are going to sell, we are going to purchase it. So how to find the purchases? Let's do it using a working note. And now I will use this. The firm has a gross margin of 25% on sales. I told you to leave it as of now. So now we will go back to that point also. So I'll write here working note on purchases. It is very important. So please listen carefully, and suppose you don't understand anything, let me know so that I can repeat it. Is it visible?
yes, ma'am.
Now all of you listen to me carefully, because as I told you, and again I'm repeating, it is important to understand this. Material for the sale of each month is purchased 1 month in advance. So first I'll explain you this point. Material for the sale of each month is to be purchased 1 month in advance. So whatever I have to sell in November, I have to purchase it in October only, 1 month in advance. Whatever I have to sell in December, I have to purchase it in November only. So in advance I'm purchasing, because if I have the stock, then I'll be able to sell it in the next month. Is this logic clear?
Yes, ma'am.
So if I have to
Yes,
sell,
ma'am.
yes. So if I have to sell something in December, I have to purchase it in November, 1 month in advance. Now, how much to purchase? What is the cost of purchase? So they have told here, materials for the sales of each month is purchased in advance. So if my sales for December is 2,20,000, I won't purchase full 2,20,000 worth goods, because in sales we have cost of purchase as well as profit. Agree?
Yes, ma'am.
Will you
Yes, ma'am.
yes, you will never sell the goods cost to cost. I bought a pen for 10 rupees, I sold it for 10 rupees. Then what is the use of selling? So if I buy a pen for 10 rupees, I will sell it for 12 rupees. So my sales will be 12 and purchases will be 10. So I cannot take sales as purchases value. I need to find the purchases value. How do we find? Here, this point which I told you, I'll refer it later. See what it tells. The firm has a gross margin of 25% on sales. That means out of the total sales, 25% is your gross profit or your profit. So remaining 75% will be your cost. And that cost is nothing but your purchases. Is the logic clear? Whatever we are,
Yes, ma'am.
whatever we are selling, 25% of that is profit. It is the gross profit or the gross margin. Rest 75% is our purchases. So see here how I'm writing first, and then if you have doubts, you let me know. We will purchase December sales in November because we are purchasing 1 month in advance. What will be the value of purchase? It will be 75% of December sales. So whatever I'm selling in December, 75% of that I will purchase in November. 1 month in advance I'm purchasing so that I can sell it in the next month. Is that okay? So
Yes,
this
ma'am.
is purchases of November. So here I will write purchases. So if I have to find purchases of November, it is nothing but next month sales. So I'll purchase 1 month in advance. So 75% of December sales. So when we do it for December, I will write 75% of which month sales?
January.
January.
So we are purchasing it in advance. So January we will purchase in December only. Similarly, for January it will be 75% of which month?
Feb.
Feb sales. So this is how the logic has to work. I hope it is clear.
Yes, ma'am.
Just copy and change the months. So here it will be March. So now we have to calculate the value of purchases. So we have to see the next month sales and find the 75% value of that. Okay, now what about June? 75% of which sales?
Ma'am, but we don't need of July, right?
No. What you're going to sell in July, you will purchase it in June.
Oh, yeah. Okay, ma'am.
Correct. So it is 75% of July sales. We don't have the values of July, so we will not get the value for purchases in the month of June also. Okay. If we had the value of July, I would have got the value for June. How to solve? I will show you. So I'm writing here purchases. We're going to find the value of purchases now. So for November, it is 75% of December sales. So we'll go to sales. December sales is 2,20,000. 75% of that we have to find, which will be 1,65,000. Okay, then in December we want 75% of Jan sales. So January 1,20,000 is the sales. We find 75% of that. That comes to 90,000. So we will have 90,000 here. Similarly, 75% of Feb sales in January we have to take. So 1 lakh is the Feb sales. 1 lakh 75% is how much?
75,000.
75,000. Okay. Then similarly for Feb we have to see March sales. So March is 1,50,000. 75% of March is 1,12,500. So I'll write the values here. I hope you understood how I am calculating it.
Yes, ma'am.
So 1,80,000 and 1,50,000. 1 second. And here and there 1 lakh. See, 75% of June. So 2 lakhs, 75% is 1 lakh 50, and here also 1,50,000. So that is common. Now here for June, I need July sales. I don't have July sales, so I can't find the value. I leave it as it is. So I found the purchases value from November to May. But we cannot record this as it is because these are credit purchases, and now we need to check how are we going to pay. So see here, we finished this point. Materials for the sale of each month is purchased 1 month in advance. So we have the value of purchases now. Now we have to decide how to pay. On a credit for 2 months, that means we are going to pay 2 months later. So if I have purchased something in November, when should I pay it?
February, ma'am.
After 2 months.
Up to January.
January. So you should leave November, December, and you should pay in January. So here I am writing payments and into bracket 2 months because we have to pay 2 months later. So whatever I have purchased here in November, I will leave November. I will leave November, December, and I will pay it in January. Whatever I have purchased in December, I will leave December, January, and I will pay it in February. What I purchased in Jan, I will leave Jan, Feb, and I will pay it in March. So after 2 months, I am making the payment. Are you getting the logic? I leave this month, that is February. I leave the next month, that is March, and I pay in April. So 2 columns I am leaving. This is 1, this is 2, and then I am making the payment. Okay. Then 1,80,000, which is received in which we have purchased in March. We will leave March, April, and we will pay it in May. And 1,50,000, which I purchased in April, I will leave April, May, and I will pay it in June. So we are interested in this part, the payments. Not in what we purchased, when we purchased, 1 month in advance we purchased, how much percentage. All that is required to find this column, the final answer of payments. And if you look at payments, it is there from January to June. So here is the values of January to June, which we can actually record now. Is that okay? So we'll go
Yes,
to the cash budget, and we'll write here payments of purchases. We have the values from Jan to June, so we will record those same values here. 1,65,000, 90,000, 75,000, 1,12,500, 1,80,000, and 1,50,000. So this was the, here you write working note 2. So how did we get these values? We did the second working note. We number those working notes as 1 and 2 so that you get to know, even the examiner gets to know that you have done working notes for that. So we finished till here. Now we'll go to the next part. The time lag for the payment of wages and salaries is 1/3 of a month, and that for miscellaneous expenses is 1 month. So now instead of telling you half or quarter, they have given you 1/3. So we'll find out how that 1/3 will actually work. So I'll write here wages and salaries. Okay, now just see here, all of you, they're told 1/3. Okay, that means 1 divided by 3. That means out of the 3, 1 portion. So how many portions are still remaining?
2.
2. Okay, suppose you have 3 chocolates. They are telling 1/3 means out of the 3, 1 they are taking now. So 1/3 is nothing but 1 portion of all those 3 chocolates. So remaining are 2 portions. So that means the remaining is 2/3. So 2 by 3. It is in Excel, so it might be showing as date. but it is nothing but 1/3 and 2/3. Did you understand the logic how I wrote 1/3 and 2/3? The denominator is 3. So 1/3 means out of 3, 1 portion. So remaining is 2. So the next part remaining will be 2/3. Is that okay?
Yes, ma'am.
Half,
Yes,
half,
ma'am.
half how we do 1/2, 1/2. So of the 2, 1 there, 1 here. Here they are not doing half, they're saying 1/3 and the rest 2/3. Okay. So let's see now what they have told here. The time lag for the payment of wages and salaries is 1/3 of a month. That means 1/3 will be paid later. So 1/3 of a month is time lag. Okay, so I'll write here 1/3 time lag. Okay, so that means 1/3 will be paid in the next month. So 2/3 will be paid in current month. So it is 2/3 in the current month. 1/3 is the lag, means 1/3 will be paid later. So 1/3 of the previous month, or you can write next month. So whatever is the wages and salary of January, 2/3 of that I will pay in Jan only, and 1/3 of that I will pay in Feb. Did you understand the logic?
Yes, ma'am.
Okay, so let's see how much are the wages and salaries now. For January, it is 24,000. So I have to find 2/3 of 24,000. So 2 divided by 3 into 24,000 if you do, we'll get it as 16,000. So 16,000 in the current month, that is 2/3 in the current month, and remaining 1/3, that is 8,000, will go to February. So for February, January is previous month. So this 8,000 has come from Jan. That means it has come from the previous month. Okay. Similarly, we'll find for Feb. Feb, it is 24,000 again. So that will be 16,000 in this month, 2/3, and 8,000 in the next month, that is 1/3. Then wages and salaries for March is also 24,000. So similarly, 2/3 of 24,000, 16,000 in March, and remaining 8,000 in April. Then wages and salaries for April is 30,000, 2/3 of 30,000, which comes to 20,000, and remaining 1/3, that is 10,000 in the next one. Then for May, it is 27,000. So May, 2/3 of 27,000 is 18,000, and the remaining 9,000 in the next one. And for June also, it is 27,000. So 2/3 in June, and remaining in July. July we are not taking. Now for Jan, we need the previous month. So previous month of Jan is December. So December, 30,000 was wages and salaries. 2/3, that is 20,000, will be paid in December only. Only 1/3, that is 10,000, will be paid in Jan. So here 1/3 of previous month, that is 1/3 of December wages and salary is 10,000. Any doubts in this?
No, ma'am.
Okay. Now let's see what they've told about miscellaneous expenses. And that for miscellaneous expenses is 1 month. So miscellaneous expenses will be paid 1 month later. So it's not half, 2/3, 1/3, exactly 1 month later. So we'll write here miscellaneous expenses into bracket 1 month. So whatever we are doing in December will be paid in Jan, and so on. So miscellaneous expenses of December are 27,000. We will pay it in Jan. Then miscellaneous expenses of Jan are 21,000. We'll pay it in Feb. Miscellaneous expenses of Feb are 30,000. We'll pay it in March. Miscellaneous expenses of March are 24,000. We'll pay it in April. April, it is 27,000. We'll pay it in May. And May, it is 27,000, which we will pay it in June. So I'm paying 1 month later. Okay, so this was about miscellaneous expenses. Let's see what is the next adjustment. Debentures worth rupees 40,000 was sold in January. When you sell debentures, what happens? Cash comes in, receipt or payment? Receipt. So sale of debentures. In which month they are told? January, 40,000. So when you sell debentures, you will receive 40,000 rupees in the month of January, not in all the months, only January. Okay, then next. So this is also done. We left with the last two adjustments. And if you look at the table, we have completed the entire table also. The firm maintains a minimum cash balance of 40,000. Funds can be borrowed at 12% per annum in multiples of 1,000. Interest being payable on monthly basis. So this all thing we have to do for closing balance. And they have told cash balance at the end of December is 60,000. So this is nothing but opening balance for Jan. End of December balance will become opening for Jan. So these 2 points we will take into account after finding the surplus or deficit. So first we'll find the total of A, that is nothing but total of receipts. Okay, so now we'll find here total of B. B starts from here and all these columns. So we found the total of receipts and payments. Now we'll find the surplus or deficit. Sure, we write. Which is nothing but receipt minus payment, A minus B equal to 2 lakh minus 2 lakh 18. So if you see, in the first month only we have deficit of 18,000. Then Feb and March there is surplus, and April, May and June again there is deficit. Okay, so these are the values. Now what we do add opening balance. We'll get closing balance, but we'll call it as indicating closing balance because there is a minimum balance which they want. So it may not be minimum as required. So this is indicating. If we fall short of minimum closing balance, what we do? We need to borrow. So when we borrow, we add that money. So add borrowings. They have told you you are able to borrow at an interest rate of 12%. So once you borrow, you should start paying interest. When you pay interest, it is payment, money is going out. So I will write less interest in borrowings. One sum I did in the last class of this kind, in which they said ignore interest received and paid. So we didn't take interest. But in this sum, they have told interest is 12%. So when you borrow, you need to pay interest. So we will less interest payment also. They have not mentioned anything about repayment. If they tell you to repay, if it is in excess, we would have done that also. But nothing is mentioned about repayment. Therefore, we will not show the repayment. And nothing is mentioned about investment also. In the previous sum, they had told you anything above 7 lakh, invest. Anything below this much, borrow. But here, they have not told us to invest. When they don't ask you to invest, you cannot invest it on your own because we don't know how much they want to invest. So we'll not show investment and we are not even showing repayment because nowhere in the problem they have mentioned to repay the loan. So only these two things we will borrow and we will pay interest on borrowings. When we do these two adjustments, we will get the closing balance. Okay, so let's start it for January. Opening balance, here is the value given. Closing balance for December was given, which becomes opening balance for Jan. Cash balance at the end of December is 60,000. So this will become opening for Jan. So I'll write here 60,000 and I have to find the closing balance. So your deficit, surplus or deficit plus closing balance will give me the indicating closing balance. Indicating closing balance is 42,000. Just see here what they have told. The firm maintains a minimum cash balance of how much? 40,000.
40,000.
Yes. And we have a balance of 42,000. So we are having minimum balance a little more than that only. So should we be borrowing?
No.
No. And if we have not borrowed, will we pay interest?
No.
No.
No, ma'am.
So because we have 42,000, which is much higher than the minimum balance required, we need not borrow, we need not pay interest. So we'll do equal to 42,000 plus the borrowings, which is 0, and minus the interest, which is 0. So that will remain 42,000 as it is. Now this 42,000 closing balance of January will become opening balance for February. Are you getting the logics and understanding?
Yes, ma'am.
So now we'll find the indicating closing balance, which is nothing but equal to, we add the surplus or deficit with the closing balance. So I'm adding both. So we get 59,800. Should I borrow? Yes or no?
No.
No,
No, ma'am.
because the minimum balance is 40,000 and I have 59,800. I have much more than the minimum balance. I need not borrow. When I'm not borrowing, I will not pay interest. So my closing balance will remain as it is, 59,800. Closing balance of Feb will become opening balance for March. So now I will add the surplus or deficit with the opening balance to find the indicating closing balance. So for March, the closing balance is 64,800, which is much higher than the minimum balance, which was 40,000. So we need not borrow, nor we will have to pay any interest. So 64,800 will be the closing balance. This will become opening for April. So now April has deficit. So from that 64,800, we will pay that deficit of 13,300 and we'll get a closing balance of 51,500. But still that 51,500 is much higher than 40,000, which was the minimum balance. It is more than that. So we need not borrow, nor we will have to pay any interest. So 51,500 as it is will be our closing balance. Now this 51,500 becomes opening balance for May, and May has a deficit. So when it has deficit, we need to pay the deficit from the balance. So what we will do, from 51,500, we will pay 47,000 deficit. What is the balance remaining? 4,500. Now tell me, should we borrow?
Yes, ma'am.
Yes, because the minimum balance that we need is 40,000 and I have only 4,500. So I need to borrow. Okay, so how much I should borrow? So I want 40,000, out of which I have 4,500. So how much more is required?
35,500.
35,500. Is that clear, everybody? So I have to borrow 35,500. But see the condition here, all of you. Again, I'm repeating. We have to borrow in the multiples of rupees 1,000. So what does that mean? We cannot borrow in hundreds, tens, hundreds, lakhs. We cannot borrow. We have to always borrow in 1,000, 1,000, 2,000, 5,000, 10,000. So I can borrow 35,000, but I can't borrow 500 because it is in hundreds. So I can either borrow 35,000 or I can borrow 36,000, but I cannot borrow 35,500. So how much I should borrow according to you?
36,000.
36,000, correct. Because if I borrow only 35,000 and right here, see, I'm showing you how it will happen. If I borrow only 35,000 and right here, then what I should do? indicating closing balance, add borrowings. So I have borrowed 35. Okay, in this month only I will not pay interest, because today if you take loan, today only bank will not ask you to pay interest. Interest will start from next month. Okay, so this month interest I am not paying, next month I will have to pay. So how much will be the balance? You see, 4,500 plus 35,000. It will be, sorry, 39,500. So what is happening? Again, it is less than 40,000. Are you getting the logic?
Yes, ma'am.
So I have to make it 40,000. So I cannot borrow 35. Then the rule says I cannot borrow 35,500 because it is in hundreds. That's why I will borrow little more. I will borrow 36,000. The very next decimal I'm taking. So 35 no, then 36 we have to take. So I'll borrow 36,000. If you borrow 36,000 to the closing balance 4,500, I will add the borrowings 36,000 and I will have a closing balance of 40,500, which is much higher than the requirement. Is this fine?
Yes, ma'am.
Yes, ma'am.
Why we didn't pay interest here?
It's first month of
Yeah, because today only I have borrowed, or this month only I have borrowed. So as soon as I borrow, interest will not be paid. At least 1 month should pass, and in the next month, first of next month, I will pay interest of this month. Okay, so from next month, interest will start. Now this 40,500 closing balance will become opening balance for March. Sorry, for June. So now June also has deficit. So we need to minus the deficit from the opening balance. So from 40,500, I will minus 2,400 deficit. So how much I have? 38,100. And what should be my minimum balance?
40,000.
40,000. So that means I need to borrow. Agree?
Yes, ma'am.
See here, all of you, my minimum balance should be 40,000. Just show it to you. Please listen to me carefully now. Focus on it because there is interest portion also which I am taking. Okay, so see here, all of you. In the previous month, we borrowed 36,000. Okay, and how much is the interest that has to be paid? It is 12% per annum. So on 36,000, I will pay 12% interest per year, per annum. But I'm not taking it for per annum, right? It is only 1 month. Last month I took loan. This month I'm paying interest. So I need monthly interest. Getting the logic?
Yes, ma'am.
Yes, ma'am.
So we'll calculate monthly interest. Just see here, 36,000 into 12%. This is the yearly interest. Okay. Now, if I want monthly interest, I will do 4,320 yearly interest divided by 12 months. So I will get
360.
360. So if you divide, you will get 360. So this is the monthly interest. So here I will take interest 360. Okay. And now just see what we are doing with the interest. Here I have written less interest on borrowings. Can everybody see this highlighted area?
Yes, ma'am.
Yes. So what I have to do, after I borrow, from that I have to less interest and then I'll get closing balance. And how much should be this closing balance? It should be minimum 40,000. Anything above that is also okay, but minimum 40,000. Okay. Now we'll see how much we have to borrow. Okay. 38,100 we already have. So how much is remaining that we need to borrow? From 40,000, I have 38,100. So from this 48,000, I already have 38,100. So how much is remaining? 1,000?
10,900.
1,900. Now all of you listen. If I borrow 1,900, okay, as per our calculation. So 38,100 plus 1,900, that will become 40,000. 40,000 minus 360 because we are paying this interest, right? So what will be your closing balance? 39,640. Can we have a closing balance of less than 40,000?
No, ma'am.
No.
No, because
No,
we
ma'am.
need a minimum of 40,000. So we are not borrowing only 1900. We have to borrow 1900 plus 360 because we have to pay interest also of the previous month borrowing. Are you understanding? Yes or no?
Ma'am.
Yes, ma'am.
So
Yes, ma'am.
1900 plus 360 means I have to add both, and that will be equal to 2260 is what I should borrow. Okay, now another logic. We cannot borrow in tens and hundreds. So I can borrow 2000, but I cannot borrow 260 rupees. 260 is in tens. So either I should borrow 2000 or I should borrow 3000. What I should be doing?
3,000.
So here
3,000.
we will not borrow only 1900, but we will borrow 3000. Okay. If you feel that I should borrow 1900, so 19 I can't, either 1000 or 2000. And if you borrow 2000, then again you will have deficit because from that 2000 you will have to pay interest also. So we are adding the interest amount. We need 2260. So we are borrowing 3000. Now if you find it, 38,100 plus 3000 is 41,100 minus 360 if you do. You will get 40,740, which is more than the minimum balance. So we have met the criteria that the company should have a minimum balance of 40,000. Just see every month closing balance is either 40,000 or more than 40,000. It is not less than 40,000. Did you understand this problem?
Yes, ma'am.
Yes, ma'am.
So, if you are listening to me carefully from day one and attending all the classes, you might have observed every problem that I am teaching has something or the other new. Here we had 1/3, 2/3 of wages as a new thing. We had interest on borrowings as a new thing, right? And then we had purchases amount only was not given. We had to actually find the amount of purchases and then do the payment of it. Then they had not told you clearly how the payment will be received, 50% in first month, second month, third month from debtors. So you have to do that working note. So every problem that I'm doing is important and you need to practice all of them. Only then you will be perfect to do cash budget sums. Okay.